Bismillahirrahmanirrahim. In this video, we will discuss the second component of fraud triangle, that is opportunity. We will talk about the major factors that increases the opportunities for individuals to commit fraud within an organization. We will also talk about the standard framework for internal control by the Committee of Sponsoring Organizations. We will discuss the primary control procedures, the multifaceted factors contributing to fraud within an organization, and finally, we will discuss the third component of fraud triangle, that is rationalization. Please like, subscribe, and share my channel to search for accounting lessons and hit the notification bell button to alert you for the latest video. For all of your questions, comments, and suggestions, please put them in the comment section below. And for webinar and guest speaker invites, please send me a message at accountingamir@gmail.com. Accounting is AK. We hope that this video helps students in their academic development and teachers in enhancing their lesson plans and teaching methodologies. So the second component of fraud triangle is opportunity. Opportunity is a crucial factor in the fraud triangle, enabling individuals to commit fraud, conceal it, and avoid detection or punishment. Several factors contribute to increased opportunities for fraud within an organization. Lack of controls. When there are not enough checks to stop or catch fraud, people might take advantage of the situation. Inability to judge performance quality, that is, when there is confusion or unclear guidelines for assessing performance. It opens the door for fraudulent actions to slip through without being noticed. Failure to discipline fraud perpetrators, that is, when fraudsters don't face appropriate consequences for their actions, it can encourage others to do the same wrongdoing. Lack of access to information. When people don't have full access to important information, it becomes easier for them to alter data or hide fraudulent actions. If employees don't know about fraud risk, don't care about unethical actions, or can't recognize suspicious behavior, it makes it easier for fraud to happen. When there is no clear record of transactions and actions, it is difficult to track fraudulent behavior and punish those responsible. Implementing good control measures is vital for stopping and uncovering employees' fraud. The Committee of Sponsoring Organizations, COSO, has set up a standard framework for internal control that many companies use. This framework includes control environment, that is, establishing ethical standards and promoting integrity from the top down. Accounting function, ensuring accurate financial reporting in line with regulations. And control activities, that is, putting in place specific controls and procedures to manage risk and protect assets from fraud and misuse. By focusing on these areas of internal control, organizations can lower the chances of fraud and create a more honest and reliable workplace environment. Let us have an overview of the control environment that emphasizes the role of management, the importance of proper modeling and communication, the significance of the tone at the top, and the requirements of a code of ethics. The workplace environment influenced by how management behaves, how management communicates, hires, organizes the company, and the effectiveness of internal audits. The management sets the tone for the organization. Employees often mimic management's behavior. For example, if management acts dishonestly, employees may follow suit. Proper modeling and communication. The management should lead by example and clarify ethical standards. Inconsistent behaviors, we can control measures. Senior management's tone is crucial for establishing an ethical conduct mandated by Sarbanes-Oxley Act for public companies. The Code of Ethics should be mandated by the Sarbanes-Oxley Act for public companies. It includes addressing conflict of interest, accurate disclosure, compliance with laws, internal reporting, and accountability. Control environment prevents fraud by fostering ethical behavior and enforcing adherence to ethical standards. Management conduct and communication shape the organization's culture and discourage fraudulent activities. Clear and consistent management communication is crucial for establishing and reinforcing acceptable behavior within an organization, similar to how parents teach honesty to their children. Methods of effective communication include code of conduct, that is clearly defined rules outlining expected behaviors for employees, sessions during orientation and ongoing training to communicate organizational values. Clear and regular communication is crucial to prevent fraud and unethical behavior. Inconsistent communication can confuse employees and lead to misconduct. Consistent management communication fosters integrity, prevents fraud, and maintains stakeholder trust. The third critical element in creating the proper control structure is appropriate hiring. Effective hiring practices are crucial for establishing a strong control structure within an organization. Like research shows that many people may exhibit dishonest behavior, which underscores the need for thorough screening during hiring. Hiring individuals lacking personal integrity can lead to fraud and misconduct, especially in roles with access to sensitive information or assets like cash. Inadequate screening can result in severe repercussions such as legal and reputational damage, as seen in cases where employees with criminal backgrounds caused harm. Stringent hiring practices, including background checks, expert interviews, and reference verifications, help identify potential red flag among job applicants. Companies conducting thorough background checks have successfully uncovered issues like falsified credentials or criminal records, preventing potential fraud incidents. Employee fraud can be financially devastating, especially for small companies. Background checks on all applicants help mitigate risk and ensure workforce integrity. In summary, prioritizing integrity during the hiring process is essential for mitigating fraud risk and maintaining a trustworthy work environment. The fourth fraud deterring element of the control environment is a clear organizational structure. Having a clear organizational structure is essential for deterring fraud. When responsibilities are well defined, it's harder to commit fraud unnoticed. For instance, in a bank where a teller stole money orders, unclear custody responsibilities allowed the theft to go unnoticed. Additionally, an effective internal control audit department and security or loss prevention programs are crucial. Internal auditors act as a deterrent and provide independent checks, moving perpetrators question the risk of getting caught. Visible security and robust loss prevention programs ensure thorough fraud investigations and address control weakness. In summary, a combination of leadership, clear communication, appropriate hiring, transparent structure, and effective internal audit discourages fraud. Failure to uphold these elements increases the risk of fraudulent activities within an organization. The second component of the control structure is a good accounting system. A strong accounting system is vital for preventing and catching fraud. Fraud involves theft, concealment, and converting stolen assets. Unlike a bank robbery, fraud relies on hiding the theft, making it hard to spot. Effective accounting system creates trails that makes concealing fraud tough. Frauds often hide in accounting records based on transaction documents, which can be paper or electronic. Altering or fake documentation to cover fraud can be caught with careful scrutiny. A good accounting system ensures transactions are valid, authorized, complete, properly classified, reported on time, valued correctly, and summarized accurately. Without it, distinguishing between fraud and mistakes becomes tough. The third component of effective control in any organization is implementing robust control activities or procedures. In any organization, robust control activities are crucial for effective management. While small businesses with sole owners may not need extensive procedures due to direct involvement, larger organizations with multiple employees require controls to align actions with management's goal. Control procedures aim to minimize fraud opportunities and ensure organizational objectives are met. Five primary control procedures are essential across all businesses, that is, segregation of duties or dual custody, authorization systems, independent checks, physical safeguards, documents, and record management. These fundamental principles guide various control procedures. Effective fraud prevention involves choosing suitable controls based on the organization's specific fraud risk. Let us look into a case study on improving academic performance. Mark, a seventh grade, struggled in German class due to his dislike for the teacher receiving an F. To address this, his parents implemented three controls: daily forms. Mark's parents created simple forms for the teacher to track Mark's preparedness and responsibility in class. This served as an independent check on Mark's performance. Mark's rollerblades used for street hockey were taken away until his grades improved. This represented an authorization control, limiting his authorized activities. And finally, behavior change. So, with these controls in place, Mark's behavior and performance in German classes improved significantly. His grades went from F to B by the end of the term. These controls helped Mark meet his parent expectations and improve his performance in German class. Let us now talk about uh, each of the primary control procedures, and the first one is segregation of duties or dual custody. Segregation of duties and dual custody are measures to prevent fraud and errors by splitting tasks among different individuals. Tasks are divided into two parts to prevent one person from controlling everything. For example, handling cash and accounting for it are separated to limit access. Two people must work together on a task, ensuring checks and balances. It takes two to complete one job, often used with cash or sensitive information. These controls are crucial, especially with cash handling. For instance, when opening incoming cash receipts, two people work together or tasks are split to prevent fraud. Fraud becomes easy when one person has unchecked access to sensitive tasks or assets. The case of Fred R highlights the risk without segregation of duties. Now, Fred R, working for a medium sized home builder, embezzled over 400,000 by manipulating check writing and bank reconciliation. Fred wrote checks for legitimate amounts but recorded higher sums in the check stubs. He used checks to himself, he rather issued checks to himself for the extra amounts and marked them as void on the stubs. Fred destroyed these self issued checks before the bank statements arrived. Despite fraud, Fred balanced the bank reconciliation process. Fred's case highlights the danger of one person controlling check writing and reconciliation, leading to vulnerabilities and fraud. It stresses the need for strong segregation of duties and internal controls to prevent and catch fraud. Fred's frauds could have been prevented if critical tasks like reconciling bank statements or writing checks were not solely handled by him. These functions should either be segregated among different individuals or performed directly by the business owner. Segregation of duties or dual custody can be costly as it involves hiring two individuals for one job, which many businesses may see as a luxury due to high labor cost. It's a trade off between increased expenses and reduces fraud opportunities. Enforcing dual custody can also be challenging, requiring strict focus from both individuals involved. In a dual custody setup, individuals should concentrate on their task without distractions. However, fraud can still occur. This highlights the importance of implementing effective controls despite costs and challenges to reduce the risk of fraud and error. The second internal control procedure is a proper system of authorization. So, authorization procedures ensures individuals have permissions for specific activities like forms, passwords, signature cards, and spending limits are common authorization methods. Fraud reduction, limiting unauthorized activities, minimizes fraud opportunities. For instance, restricting safe deposit box access prevents theft. And not enforcing authorization controls simplifies fraud. These controls prevent unauthorized access and resource misuse, safeguarding against fraud in organizations. Let us talk a bit on safe deposit box fraud case. Now, Mary and Ron, once joint safe deposit holders at a bank, faced marital issues and cancelled their shared box post divorce. Following this, Ron opened a new box with his daughter as a consignor without informing Mary. Mary, taking advantage, claimed a lost key to drill open the box, which the bank allowed without confirming the closure of the old one or the opening of the new one. Mary emptied the box before Ron realized. The bank settled with Ron for 200,000 due to Mary's unauthorized access, highlighting the need for authorization controls like signature verification. The third internal control procedure is independent checks. Now, independent checks are vital for internal controls, aiming to reduce fraud and concealment opportunities by monitoring activities like mandatory vacation. Employees are required to take annual week-long vacations, allowing others to perform their task and detect irregularities. Employees rotate roles to uncover potential fraud, providing exposure to different tasks. Regular cash counts by multiple individuals verify financial transactions, accuracy, and integrity. Supervisors ensure compliance with policies by reviewing subordinates' work, adding oversight. Independent auditors assess an organization's operations and financial reporting impartially. Anonymous reporting avenues encourage whistleblowing and expose fraudulent behavior. An example of independent checks is seen in a Baskin Robbins store in Washington, D.C. Now, customers are welcomed by a friendly cashier upon entering. Two prominent signs hang behind the cashier. Customer service number. One sign provides a telephone number for customers to call if they encounter any service related issues, indicating a commitment to resolving customers' concerns promptly. And second, free Sunday offer. The other sign announces a promotion where customers who receive a star on their sales receipt are entitled to a complimentary Sunday, encouraging repeat visits and customer loyalty. Now, these signs aim to enhance customer experience and satisfaction while promoting loyalty through incentives. Implementing these checks promotes transparency, accountability, and integrity, reducing fraud and misconduct risk in organization. In retail, like ice cream stores, fraud often involves not recording full cash amounts or undercharging customers. For instance, cones may be made smaller to hide extra ice cream not entered in the register. Baskin Robbins uses signs prompting customers to check their receipts. A star indicates eligibility for a free Sunday. This encourages customers to review receipts. If a cashier charges $2 but records one, a customer will notice and report it. The science deter fraud by promoting transparency and encouraging customer transaction monitoring. Baskin Robbins signs serve as a model for fraud prevention in retail. The fourth control procedure in physical safeguard is physical safeguard that is often used to protect assets from theft by fraud or other means. So, like for example, of document failures. So, safety locks, key and fences protect assets from theft and fraud. They limit unauthorized access, reducing fraud opportunities. And the fifth control procedure is documents and records to create a record of transactions and an audit trail. Documents and records are vital for recording transactions and establishing an audit trail. Although not a preventive control, they help to detect fraud. Banks use documents for reports like kiting suspect reports and employee bank account activity. Um, for example, banks require signature cards and proof of box ownership for safe deposit box access. In a case, a bank employee opened the wrong box, allowing customers to take the money unintentionally. Physical safeguards and documents control protect assets and maintain accountability, reducing fraud and theft risk. So, here is a summary of fraud prevention and detection control. Uh, Control environment sets the tone for ethical behavior, hires honest employees and clarifies job responsibilities. Accounting system records transactions to make it hard for fraudsters to access, hide, or convert stolen assets. Procedures like authorization controls, independent checks, and physical safeguards reduce fraud opportunities. The common factors contributing to fraud are difficulty in judging employees' performance quality, failure to punish employees involved in fraud, not having necessary data to prevent or detect fraud, lack of awareness, indifference, or inability to address fraudulent behavior, and no clear transaction record, making it hard to trace fraud. Addressing these factors and following established controls are vital for preventing and detecting fraud in organizations. Now, fraud can occur due to various factors within an organization, including difficulty assessing performance quality, failure to discipline fraud perpetrators, limited access to information, ignorance, apathy, and incapacity, absence of an audit trail. Now, these factors contribute to the occurrence of fraud and need to be addressed to prevent and detect fraudulent activities. Let us discuss each one of them. And the first one is inability to judge the quality of performance. In, in professions like law, medicine, dentistry, accounting, engineering, and auto mechanics, it's hard for clients to judge service quality Unlike tasks like fence construction, where quality is clear, assessing professional service is complex. Clients may struggle to know if they are overcharged, receiving poor service, or unnecessary work. Now, this ambiguity lets service providers exploit clients. It is tougher to gauge professional service quality compared to tangible tasks like fence construction. Sears, a reputable company, faced fraud allegations in its automotive service centers. Mechanics had quotas for parts, services, and sales per shift. Failing to meet quotas risked reduced hours or department transfers. Under pressure to meet quotas, employees resorted to fraud, believing customers couldn't verify if recommended parts and services were necessary. The case showed how internal targets and incentives can lead to unethical behavior among employees. The second factor that can cause fraud in an organization is lack of discipline. Now, failure to discipline fraud perpetrators often encourages repeat offenses. If not prosecuted, fraudsters, often respected in their communities, resume fraud without consequences. Prosecution brings embarrassment and deters future fraud. Many organizations choose to dismiss rather than prosecute due to cost and time, but this approach fails to address the problem. Term- Termination fraudsters signals no severe consequences. Terminating signals no severe consequences, inviting others to commit fraud. Without prosecution, fraudster can build resumes and get better jobs. Failure to prosecute not only allows fraud to continue but also reward perpetrators with better opportunities. The third factor that can cause fraud in an organization is lack of access to information. Now, lack of access to information enables fraud, especially in large scale cases like ESM and Lincoln Saving Loans. In ESM, securities were sold multiple times, but victims didn't know because ESM held investment records exclusively. In Lincoln Savings and Loan, Charles Keating inflated profitability with sham transactions, and auditors lacked access to all transactions, allowing fraud to continue. Now, these cases show how transparency and access to information are crucial in preventing and detecting fraud. Let us talk about a case of fraudulent dealings. The R.A. Holmes sale case. The R.A. Holmes sales involved Lincoln Savings and R.A. Holmes Incorporation. They are orchestrated by defendants like Charles Keating. Here is how it worked. On September 30, 1986, Lincoln subsidiaries sold 1,300 acres near Tucson to R.A. Holmes for 25 millions. 5 millions in cash and a 20 million promissory note secured by the land. Defendants caused Lincoln Savings to record an 8.4 million false profit. Oral promises were made by Keating, like reimbursement of the down payment by Lincoln. Lincoln's subsidiary would handle development and marketing. R.A. Holmes could sell the land for profit within a year. Now, these transactions demonstrate how fraudulent deals manipulate and deceive parties. In the R.A. Holmes sales, Auditors missed the oral commitments that violated real estate accounting standards. Charles Keating lent RA Holmes 5 million for a down payment and managed the property undisclosed to auditors. Lincoln Savings inflated profits, misleading the investors. Investment scams thrive on limited information access. A small business employee stole 452,000 by altering financial records. Asymmetric information led to lawsuits. A company sued its bank for negligence, claiming the bank has better information to detect a 5 million embezzlement by their controller. Thus, hidden information enables fraud. Demand for full disclosure and beware of asymmetrical information risk. The fourth common factor contributing to fraud is ignorance, apathy, and incapacity. Fraudsters often target vulnerable individuals like older adults and those with language barriers because they may struggle to detect fraud. So, vulnerable citizens are targeted by fraudsters due to their limited capacity or knowledge to recognize fraudulent activities. Uh, Consider the case of uncovering fraud in healthcare settings. A nurse stole money from patient's room at a hospital. The security used dye covered bills to catch her. When the nurse's hand turned purple from the dye, she was caught. This shows how surveillance helps catch fraud. Fraudsters often target vulnerable hospital patients, especially those under sedation who may not notice theft in their rooms. Elderly individuals are susceptible to scams like pigeon drops, where scammers pose as bank officials to steal money after convincing victims to withdraw cash. Investment scams such as AFCO fraud exploit the elderly by promising high returns on home mortgages, despite being unrealistic. Many scams, like Nigerian investment schemes, target the elderly or less educated through pyramid schemes, internet fraud, and telemarketing scams, resulting in substantial financial losses. These scams highlight the vulnerability of certain demographics and the need for awareness and protection against fraudulent activities. The last common factor contributing to fraud is lack of an audit trail. Fraudsters often alter financial records, especially the income statement, to hide their activities. They know that changing this statement can erase the audit trail, making it hard to track the transactions. Organizations aim to create documents for reconstructing transactions, but frauds involving cash payments or record manipulations are challenging to follow. Small fraudsters prioritize concealing their activities by manipulating financial records, especially the income statement. In summary, altering financial records, particularly the income statement, is a common tactic to hide fraud. Let us look into a case study on embezzlement scheme. Now, John Rivera, a controller at a small bank, embezzled 100,000 over 4 years by having an upstream bank pay her credit card bills. She covered her tracks by creating false accounting entries that would be erased at year end when expense accounts were reset to zero balances. For example, John manipulated expense accounts like advertising expenses, making detection difficult if auditors didn't catch it before year end. She avoided manipulating outstanding checks on bank reconciliations to avoid persistent concealment issues and refrained from manipulating inventory, knowing shortages would carry over. Jones' fraud remained undetected until she became greedy and used less concealable methods. This case emphasizes the need for vigilant monitoring and detection mechanisms to prevent fraud. So far, we have discussed the second element of the fraud triangle, that is opportunity. The third element is rationalization. Now, Jim Baker and Richard Dork were convicted on multiple counts of wire and mail fraud, along with conspiracy charges. Their case is one of the largest and most peculiar frauds in US history. Their conviction resulted in jail time. And this example illustrates how rationalization contributes to fraud. Now, Jim Baker and Richard Dorth were convicted of wire and mail fraud along with conspiracy charges in one of the largest fraud cases in US history. Baker, a well known TV minister of the PTL network, was accused of corrupt practices driven by greed and a desire for power. Despite Baker's public persona as a beloved minister, he was ultimately revealed as a fraudster motivated by selfish motives. Baker's case highlights how individuals rationalize fraudulent behavior despite their public image and authority positions, emphasizing the role of rationalization in the fraud triangle. PTL started humbly in 1973 and grew into a multi-million dollar empire, including the Heritage USA Tourist Center spanning to 2,300 acres. However, the IRS deemed many of PTL's activities as commercial ventures, leading to controversies over partnerships and investments. Baker misled worshippers, investors, and followers, misusing contributions, overselling investments, evading taxes, and living lavishly. Despite his initial sincerity, Baker's motivations became corrupted by money, leading to deceitful acts aimed at securing funds for himself. Overall, Baker's case illustrates how individuals can rationalize fraudulent actions despite their initial sincerity, ultimately leading to deception and betrayal of trust. Fraud perpetrators like Baker often use rationalizations to justify their dishonesty. They may believe the organization owes them, think they are temporarily borrowing money, or convince themselves their actions serve a greater good. Simplified rationalizations help fraudsters justify their dishonest acts. Individuals often rationalize income tax evasions by believing they pay more than their fair share or that the government wastes money. This rationalization leads to blatant tax fraud like claiming fake dependents, showing how rationalization fuels fraudulent behavior. Dr. Sam Vaksal, former CEO of ImClone, rationalized insider trading by transferring shares to his daughter, thinking he wasn't directly involved. Despite considering himself honest, Vauxhall's actions exposed ethical lapses and recklessness. Rationalization allows fraudsters to justify their action and avoid guilt. Even though they harm victims and violate ethical standards, simplified rationalization is a significant factor in fraud, enabling perpetrators to justify dishonest behavior. Let us talk about an embezzlement case. Jerry Schneider a bright and well educated 21-year-old, worked as a model executive at West Coast Business. However, he had one difference: he embezzled over 1 million from the Pacific Telephone Company. Jerry Snyder, a bright and educated young executive, embezzled 1 million from Pacific Telephone Company. His fraud began after a conversation at a party about the perfect crime, possibly influenced by possessing a stolen computer code book. Using his computer skills, Snyder accessed Pacific Telephone System and placed large orders, programming the computers to pay for the merchandise. He sold the goods but was caught when discrepancies were noticed. Snyder accessed Pacific's dispatch warehouse to collect goods using keys and documents acquired through the computer system. However, he soon felt guilty and hunted. Despite his crime, Snyder considered himself honest, justifying his action as testing the concept of the perfect crime. His pressures included greed and a desire to prove his superiority. Snyder's opportunity came from his computer's knowledge and access to keys and passwords. His attempt at the perfect crime failed due to moral dilemmas and reality of his actions. Snyder's case shows how personal challenges and rationalizations can lead individuals to commit fraud despite their perceived integrity. Fraud often involves multiple perpetrators, especially in financial statement frauds, which are often collusive. Power dynamics greatly influenced individuals to participate in fraud schemes. Max Weber defined as the ability power as the ability to carry out one's will despite resistance. French and Raven classified power into five types: reward power, that is, offering benefits; coercive power, using fear of punishment; perceived expert power, influencing through perceived knowledge; legitimate power, convincing with legitimate authority; referent power, influencing through trusted relationships. These powers impact recruitment into fraud schemes, often leading to larger fraud involving more people. Recruitment effectiveness depends on victims' susceptibility and the perpetrator's ability to manipulate different power types. Initial recruits may become conspirators and recruit others into the scheme. Understanding power dynamics in fraud recruitment helps understand how frauds escalate and involve multiple individuals. So, this completes the third video on preventing fraud. I hope you have enjoyed this presentation, and if you found value in this video, then please like, subscribe and share my channel and hit the notification bell button to alert you for the latest video. For webinar and guest speaker invites, please send me a message at accountingamir@gmail.com. Remember, effective questioning brings insight, which fuels curiosity, which cultivates wisdom. If you have any question or any suggestion regarding this session, then please put them in the comment box below or by email, and inshallah I will reply you back. Thank you so much and happy learning.